Above 98 for dollar yen. I mean, that is quite a jump from Friday, I've got to say.
Yeah, I think any dollar yen traders are aging a year for every day that goes by. It's yen years we're trading at the moment. It's remarkable volatility. I mean, the non-farms Friday was, I guess in line. I mean, frankly, it was absolutely in line when you take revisions into account. Yet the relief it provided to dollar bulls and to this dollar yen story was like very, very pronounced. And as you say, we're trading back above 98 and equity is so much higher.
What is this overreaction to data, like the data on Friday, like ADP, like some Japanese data out today? What does that suggest to you?
Well, one of two things. One is we're at a transition point. So at any transition point in the market for QE3 for the Fed, you tend to get amplified reactions. But I think perhaps the more important element is people don't have a clue. I mean, there's such an active debate on when we're tapering, how much will we taper by in the US, all these kind of things. And so the smallest surprise on the data, and I mean very small surprise, gives you this amplified reaction because suddenly people think, oh, maybe I need to change my view, and then the next day they're changing it back again. And it's a pretty tough time in the market.
What more do you expect from the BOJ now? I mean, let's face it, from where we're looking now, it doesn't seem to have worked.
Well, that doesn't seem to have worked, though they might argue, well, remember the starting point was 80 on dollar yen, so from that perspective it has worked. Remember the starting point on the equity market. So I guess one of the concerns still is the JGB. What more do we expect from the BOJ? Frankly, not much near term. They've had their shock and awe April meeting, and unfortunately the problem with that is when you deliver it all in one big bang, you kind of have to wait and see does it have an impact, and then decide on more steps. But they're tinkering. They've done the reweighting towards equities away from bonds for the pension fund. So at the margins, there's still this stuff going on.
Quick word on China. These hot cold signals from China. What do you think of this latest data? Are we again throwing toys out of prams, and will they hit 7.5%?
Well, our forecast is they'll hit 8 at HSBC. I think, again, a bit like to your earlier question, seems to be an overreaction to some of the disappointments we've had in China. Yes, some of the data points were softer than expected, some maybe because of regulatory change, and we won't go into that. But again, there seems to be this kind of wanting to grip a modest disappointment and then extrapolate it into some much bigger worry story, which I don't think really is the case.
Have the market's always been like that, then?
No, I mean, I think a lot of the time markets seem to be able to digest trauma, crisis, and seem to shrug it off to a degree. But at the moment, we're just getting these very small data points, and everybody's kind of running for the hills or running for cover, depending.